If you are a real estate investor or you own only one house, you need to pay attention. I am finna break down mortgage protection for you right now. Mortgage protection or home equity insurance is not a product, it's a strategy that we use usually to cover your mortgage payments for at least 1 to 2 years. We don't try to cover the whole mortgage for two reasons. Sometimes because of your health, you might not be able to qualify for a term product or final expense product. And then the second reason is if you try to cover the whole mortgage, it would be very expensive. This plan is designed to give you the space and time to be able to make those financial decisions. And again, your mortgage payment is usually the biggest payment that you got to worry about. So this can actually work for one home or this can work for 4 homes. So let's say you're a real estate investor and you have 4 projects going on or you own 4 houses. So you're not making a mortgage payment per se. You're actually paying back the loan or you're paying back the lender. So you're making a payment every month, but it's just going to a different person. So what you could do is you can put one policy in place just in case if something happens to you. If you be in an accident or you're not able to go to work or you're not able to do whatever you do, life shuts down. You can put one policy in place to cover that payment. Or if you only own one home, you can put a policy in place to cover that mortgage payment. Because what we don't want to happen is somebody dies and now your family don't know what to do and they still need to make this mortgage payment. Or if you are an investor, you have to pay back the lender or figure out what you're going to do about these houses. So you can actually get one policy, or if you're a real estate investor, you can get multiple policies covering these houses just in case something happens to you. And let me give you the perfect example. Let's say you own 4 houses, right? You can get a policy on each of these houses. They can be term products, meaning let's say the loan on house number 1 is 20 years. You can get a term product that's going to cover this payment if something happens to you. And here's the kicker. You can get what's called return of premium, meaning if you pay on this policy for 20 years and you live, you can just get your money back. Risk-free, right? That's right. Some carriers actually offer return of premium, meaning whatever you paid into your insurance, let's say it be 10 years, 20 years, 30 years. If you survive that time, then you get your money back. It's a return of premium. And then the last thing I want to say is most of our policies also cover you if you get a chronic, critical, or terminal illness. And that just means if you get a bad diagnosis from the doctor or if you can't work or something, this policy goes into effect and you usually have living benefits and you can get up to 90% of it while you're still alive. All right, guys. And the last thing I want to say, if you are a real estate investor, or let's just say you're doing one property at a time, right? Let's say you got one policy, like I just did this the other day. You got a policy for 50K. You're flipping small properties, whatnot, whatever you're doing. You can get this one policy. And guess what, guys? This is the best part if you're a real estate investor. It's transferable. So you can use this policy for this property, and this property if you're doing them one at a time because this policy is transferable. And again, you can have return of premium. So you can have a 20-year policy that you're paying on, and you're protecting your houses while you're doing your flips and stuff, just in case something happens to you. And then when you get at the end of that 20-year term, guys, return of premium, you can just get your money back. All right, guys, that's it for this video. This is Mortgage Protection 101. If you like this, I don't know where I'm gonna put it yet, but like it, share it, and I'll see you guys in the next video.
I'm making some calls, making some sales. It feel like losing than you by yourself. I saw way more than insurance. I'm trying to help. I'm trying to cover your debt.